So anyway, welcome. Hello. Happy New Year, everyone. We're back. And as you can see, we're kind of with Tommy back to business, just sharing, talking, very exciting time. And we're looking forward to starting this year right. And how can you better not start this year right is not what you make, but what you keep. And Tommy with all his strategies, and I love his stories, and that's why we're kind of bled over of what we were talking about. His family will resonate with so many people of his journey in real estate because it is just so important. And we always say in real estate, you got to manage it. And there's so much in business or in real estate tax advantage. And Tommy, I know you know this and you actually use it and share it. So if you don't not mind, without further ado, we'll just get started. Tommy, if you don't mind introducing yourself, telling your story, and how the heck did you go into, taxes?
Yeah, good. Really good. I'm still trying to answer that myself. So thank you everyone for being here. I'm excited about this. My name's Tommy Thornburgh. We started Prime Corporate back in 2012. And just to go a little bit further back here. So I'll go all the way back. My parents got divorced when I was 3. And my mom was a real estate agent. My dad owned a real estate brokerage. How they stayed together for 3 years, I don't know, but here we are. So I kind of joke that they always wanted my sister and I to be self-employed. When I turned 18 years old, I went and knocked door to door selling pest control. And I made about $40,000 in 4 months at 18 years old and thought I was the smartest person in the world until I came back and taxes were due and I had already spent all the money. Found out I was very, very stupid at that point. So I always thought that I was just going to go strictly into the real estate route because I was raised with it. After different consulting jobs and sales jobs, I met my now partner and CEO, Steve Harward, in 2012, and we started Prime Corporate Services. When we first started it, it was primarily a marketing and a sales engine to provide business to different CPAs and attorneys, because as great as they are at what they do, they're oftentimes pretty poor at attracting and getting the business that they actually want. As we continued to grow the business, we kept breaking all of these different accounting and law firms because we were able to bring in more clients than they were able to fulfill, which started a journey of mergers and acquisitions. So fast forward to where we are today. We do 9 figures a year. I've got about 450 employees. We file 50,000 tax returns a year. We've got a full service accounting firm, entity formation, business credit, estate planning. And I am not a CPA or an attorney. I'll go over this on my legal disclaimer, but I've got a full team of them. I've got about 150 total that work for us. I promise I wouldn't be the one filing your tax returns, lucky for you, but I will talk to you about tax strategies as an investor and as an entrepreneur that have saved me a lot of money. And hopefully I can just give all of you a lot of value today on big, beautiful bill, tax code changes, different areas and opportunities on how to keep more money in your corner. So James, anything you want to add to that, or do you want me to just go ahead and jump right in and get the show on the road?
Yeah, I would love for you to just share, but maybe with this group, if there's any kind of questions, just so as Tommy's going through the presentation for you to think, or let him think that you may have different clients from, portfolio, funds, business, personal, maybe. So I don't know if Max, Paul, Keith, Krista, you want to ask anything real quick before the show gets started?
So during the show, Tommy, we could just interrupt you.
Sure. No, yeah, don't interrupt.
That's
fine. Come on. Hey, I always let people interrupt me.
I'm casual. Whether it's an interruption or we answer questions at the end, you're not going to hurt my feelings. I'll tell you that right now. Okay, cool. This is great. One other thing that I'll add as well is being real estate professionals in general. So I talked about my mom, my dad. My wife also got her real estate license about 5 years ago, primarily for our family to be able to qualify for real estate professional status. And throughout the journey, I currently have 77 rental properties and 3 different commercial buildings. And a lot of that is with the intention of lowering tax liability. I joke that the IRS probably thinks my wife is the worst real estate agent in the world because of the losses that flow through her. But nonetheless, I'll jump in. I've got some slides to keep me on track. Feel free to throw questions in the chat. Keith has permission to cut me off, and we'll have some fun as we talk about taxes somehow, some way here today. So it's not what you make, it's what you keep. Exactly what James mentioned. And James can speak to this even better than I can, but one of the major comments that I love to make in the beginning is no one cares about your money more than you do, right? I always laugh when financial planners, and James, I almost want you to add in on this. When a financial planner tells me, Tommy, let me invest your money. I only make money if you make money. I always laugh because my follow-up comment is, are you going to lose money if I lose money? And of course that answer is no, right? So
yeah, I love that, Tommy, because we all know, and if you've been in the game enough, who's kind of playing you and snowing you and who is legit.
For sure. And there's the reason I share that is with the 50,000 tax returns that we filed last year, I had our accountants collect a bunch of different data points on why do some clients save significantly more than others. And the number one reason came down to the most boring reason that I can possibly share with you. And that was simply the clients that tracked their expenses and knew their profit and loss saved an average of $9,200 more than they did the previous year. So even if you break your year up into calendar quarters, January, February, March, quarter one, what's your profit? What's your loss? Going into the fourth quarter, how can we make it feel more like a business shopping spree season than just the fourth quarter? Because when you know that profit and loss, now you can invest into softwares, properties, investments that you know are going to better your financial future going into the following year. I've got some different tax strategies I'm going to cover, but to get it kicked off, please, whether it's a bookkeeper, QuickBooks, designated credit card, track and organize those expenses so you can make educated decisions throughout the course of the year. We found that makes the biggest difference. I'm not a CPA. I'm not an attorney. All your situations are different. I've got a full team of them. I promise you can talk to them if you need help. But there's my fun legal disclaimer. All right. So the 4 areas that I want to cover today. Number 1, different types of entities, LLCs, S Corps, C Corps, holding companies. Which one benefits you and why? What framework and questions can you ask on entities that you already have or that you set up in the future that give you a little bit more confidence in your situation? Number 2, tax deductions, how they work, big, beautiful bill, how to tie business-related expenses back to the business. Number 3, asset protection and generational wealth. It's not about where you are right now. It's where you're going to be over the next year, 5 years, 10 years. And if we combo asset protection with tax savings and credibility, a lot of times you can really feel confident and comfortable once again with the decisions that you're making. And then number 4, personal credit versus business credit. We have a really awesome business credit software that I can share with you and show you that helps clients build a business credit profile off of their entities in a 7-step process where we're currently getting over $4 million a month in different types of business credit and corporate funding for our clients. I'll talk a little bit about how we can do that as well. But to start with entity formation. So this is one that I have found to be very helpful for my mom for a long time and now my wife. When you're working with investors or when you're working with business owners, the amount of times that I hear, I need my taxes done, or I'm self-employed, they need 2 years tax history. A lot of you can already, very educated, talk about these things, I'm sure. But I look at these as just tools in your belt to be able to help more people, more clients, and your bottom line. So from an entity formation standpoint, a very biased opinion that I have, brace yourself here. My biased opinion is that everyone should be self-employed to some extent, whether it's side hustle, side business, full-time self-employment. So starting with, oh, how did I do that? LLCs are beautiful. They're great. They're simple. They're easy. But one thing to be very aware of for all of you is if you currently are operating under an LLC, review the revenue that you've generated and whether it's active income or passive income, because a lot of you probably already have those S corporations in place. But I'm always surprised when I talk to groups like this that have LLCs that haven't changed to that S corp election. If you have generated $50,000 or more of active income in 2025, talk to your accountant and see if there is value in changing that to the S corp election. You can still submit. I'm going to put this in the chat just so you can reference it to your accountants or your teams, or even if you need to ask us, we're happy to help. There is a 2553 form that can be submitted. It's a free form. 2553 form, if it's submitted and accepted before March 15th, you can actually retroactively receive that benefit for the entire 2025 year. So what that looks like is if you made $100,000 and you change and have this 2553 S corp election, it allows you to pay yourself a salary or a distribution, but it also allows you to avoid half of your self-employment tax, which is Medicare and Social Security, ends up saving you about 7% of that overall business revenue. So massive savings, massive benefit. The entities that you already have or the entities that you set up in the future, the three things that I tell people to take into consideration, number one is privacy and protection. Oh, I sent it to the wrong group. Thank you for that. 2553 form. I sent it over to Caroline. So number one, privacy and protection. How much privacy do you want? How much protection do you need? And James and I were talking about this very briefly. As the net worth increases, that protection needed obviously varies. Number two is tax benefits, profit or loss, so good or bad. How are you putting yourself in the best position possible? And then number three is credibility for not only your clientele, but also for banks and lenders. Banks are businesses, even though some of them are set up as nonprofits, which I disagree with, but that's above my pay grade. Banks are businesses and they're going to make money off your money. So how can you show yourself as legitimate as possible to get the best funding opportunities possible? And I'll share that when I talk about the business credit side a little bit more. Okay. When it comes to tax deductions, there's four words that the IRS really, really likes: ordinary, necessary, helpful, and appropriate. So when you spend $1, if it is ordinary, necessary, helpful, or appropriate for you to generate income, track it as a business-related expense. And obviously, the more business you do, the more successful you are, the more you're spreading your message, the more those business expenses are going to tie directly back in. Your phone, your internet, your power, portions of the rent or the mortgage, or a lot of the very standard deductions. But I was telling James earlier, we, about 6 months ago, launched a new tax strategy service that has exceeded my expectations, which is always awesome. It's amazing to have that happen. We have a AI system where you can upload your previous year's tax return. So you take your 24, your 25 tax return, we upload it into our AI software, and AI pulls out every box of your tax return and gives you 5 to 20 different strategies that you can implement that you are not currently implementing. So really, really awesome. That way you can cross out the ones you don't want, circle the ones you do want. We've been saving anywhere from 10 to last week, we saved someone like $140,000 in their taxes right before the end of the year. So massive win. We've had some really cool successes there. Keith, go ahead. I told you could cut me off. You don't go ahead, Keith.
Okay. In your list right here, you have two words that say client relationships. That's a pretty broad category, isn't it? So that could include anything that costs money while you're with your client.
So the reason that we put client relationships there, and thank you for this,
Yes.
entertainment was taken out a couple years ago as a deductible expense, which is very unfortunate because if you come into Utah and I take you to a Jazz game, I can no longer deduct a lot of that as a entertainment cost. It's either got to be marketing, client relations, the food costs can be deductible. So if we can itemize them out based off of how they're operating, that changes it. One of the areas that I will talk about as well is things like the Augusta rule. So the tax code is over 70,000 pages. So when tax code changes happen, which they do every single year, how do we need to repurpose or identify those expenses directly where you're actually making them deductible expenses? If I can write off a client relationship building as opposed to an entertainment cost, how can we identify it to maximize on dollars? Even if it isn't writing it off 100%. Maybe it's portions of, or maybe it's portions of the experience as opposed to the entertainment that can be deductible expenses. Does that make sense?
Does it?
Clear as mud.
Yeah.
Keith, I think you need to talk to Tommy and his team. There you go.
Yeah.
Keep you out of trouble.
But the more whenever you're building these relationships, and I mean, we're all in the relationship game, right? When we're building these relationships, there's going to be expenses that are going to tie directly back to the business. Unfortunately, golf and Jazz games and entertainment being taken off the table has been a hit for me as well. I'm as upset about it as you are, I promise. But how can we repurpose those dollars to allow them to be deductible? As you're generating more income, it just becomes more difficult to find tax codes that actually align with your short-term and your long-term goals. So I wanted to share a couple of the strategies that our decoder, is what we call it, have been helping clients with throughout the course of the year. The first one is when you're self-employed, a lot of times you have a high deductible insurance plan, or if your W-2 or your significant other has a W-2 that has the insurance, do you qualify for a health savings account? And if you already have a health savings account, great. Are you maximizing on what it truly offers? Because it's one of the only triple tax advantages that I'm aware of. If you're single, you can put up to $4,400 into your HSA. If you're married, up to $8,750. This is the 26 numbers, by the way. Last year was a little bit less. But I'll just use myself as the example here. This year, I will put $8,700 into my HSA. That is an $8,700 deductible expense against the business revenue. I can then, assuming I have, if you set up an HSA with your credit union, the dollars are just going to sit there. If you set it up with an account that you can invest the dollars, they can then grow tax-free. And if you need to take those dollars out for any medical related expenses, co-pays, medications, whatever it may be, there is no tax penalty. So the reason I like sharing this one is I talk to a lot of clients that are paying for insurance, don't have an HSA. This is a great way to utilize a deductible expense for dollars that you're going to spend anyways. I like those type of deductions. I max out all these retirement accounts every year just because I want to do what I can to lower tax liability. But my retirement accounts are one of my least favorite tax deductible expenses / investments. As an entrepreneur, I feel like I can make way more money than my retirement accounts can with my money. So where can I deploy capital that's going to lower tax liability, but make me feel confident and comfortable in the investments that I'm making? Okay. The next one, Fumi, those two beautiful little boys that you got there. How can you put your kiddos to work? What can they do to align with your business to actually get your kids working? I've got two little girls. I've got a 2-year-old and a 5-year-old. And kind of a funny story I want to share with you. I was in Cancun last year speaking to a group of holistic doctors. And I was talking about this, how you can pay your kids. And one guy stands up. I'm in the middle of my speak. It might as well have been Keith there cutting me off. I'm in the middle speaking to this group, and he goes, Tommy, you can't pay your kids. I'm a former IRS auditor. They need to be 8 years old. I said, well, excuse me, Mr. IRS auditor. Remember, I said I'm not a CPA or an attorney, but here's why I disagree, and here's why I pay my kids. My kids are models. They look like their mother. Lucky for them. They look like me. They wouldn't be models, but they look like their mother, so they're models. If that Gerber baby's getting paid, my baby's getting paid. So I have them on websites. I have them on marketing. I have them on likeliness. This year, both of my girls will make $16,000. It is a deductible expense for me. They didn't make enough money to file a tax return. So I can then invest those dollars into IRAs and life insurance and investment vehicles that are going to better their financial future while bettering the business. That aligns with my life and my goals right now. If your kids are already out of the house, let's go find another tax strategy. Let's go find something that's going to benefit you for where you are now and where you're going to be over the next several years. Okay. Augusta rule. Has anyone done this? Has anyone done the Augusta rule? I love this one. All of you will be able to benefit from this one, I'm sure. So back in the 1970s, a gentleman that lived in Augusta, Georgia, would rent his house out every time the Masters golf tournament would come into Augusta, Georgia. One year he got audited, and it's not what you know, it's who you know. So this ended up getting passed all the way through Congress, all the way through the Senate. It is now Section 280A of the tax code. And what it says is that you can rent your house out up to 14 days a year tax-free. So if James comes out to Utah, he's going to think I'm spoiling him when I have him over to the house and I've got dinners there and I've got wine there and James is saying, wow, you're really doing it, huh? What's going on here? Why are you spoiling me? Little does James know, I have filled out a rental agreement that Tommy's business is renting out Tommy's house for agreed upon amount. I will transfer those dollars from the business account to the personal account. And last year, this was a $46,000 write-off for me by keeping it under 14 days, having proper documentation, and utilizing Keith's client relations question. This is why I wanted to tie this into this one for you, Keith. If you're meeting with clients, potential investors, things that oftentimes you're going to do anyways, how can we formalize and document it and transfer the dollars to allow it to be a deductible expense? This isn't gray area. This is actual business related tax code that you can utilize that does align with your life. Okay. Because another example that I'll share is Max. I'm going to pick on you now. It's your turn. If Max and I are business partners and we're going to go talk about our meetings, our minutes, our bookkeeping, our monthly goals, our quarterly goals, our annual goals. If Max and I go rent the Marriott conference room that's next to my house, all of us would agree that's a business related expense. What I could also do is just repurpose those dollars and we could have that meeting in my home where I can still utilize that as a deductible expense. So we can get a little creative, we can get a little clever, we can think outside the box, but these are areas that once you do it once, it's like writing off your home office. You realize how beneficial it is to your bottom line. Once you do the Augusta rule in 2026, you see the savings, you see how simple it can be. It's part of who you are as a business owner every year moving forward. Okay. So let's just find these areas that align with your life and your goals and your business and directly implement them back into the business. Okay. Really, really cool strategy though. I like that one a lot.
Tommy,
Go ahead.
hey, do you have to rent the whole house or part of it?
Generally speaking, it is going to be the whole house. And the reason that I say that is because you also want to get maximum dollar. So when I'm renting out my house, I'm looking for comparables in the area. Okay, so Airbnb, VRBO, there's a cool website called peerspace.com. I'll put it in there as well. I really like this Pure Space because then I can rent it by the hour instead of the day, and I can get a little bit more bang for the buck. But this is one of the areas that we really help a lot of clients with, is how to document it, rental agreements, and making sure T's are crossed and I's are dotted. But not full house generally is going to give you maximum capacity. You do have to own your home as well. That's a common question that I get. So I figure I'd just throw that out there. If you're renting your property, you're not able to do this like a sublease. It does have to be a home that you're owning, and it's got to be less than 14 days a year.
Thank you.
Yep. Another combo question, Max, that I think you're kind of indirectly answering or asking that I want to make sure I'm clear on with you. Some people will say, my accountant told me I couldn't do that because I'm already writing off my home office. That's a very common comment that I get from people that are coming from other accountants. A lot of it comes down to just your audit risk. So my wife is self-employed, as I mentioned earlier. So my wife rents out the home office because she works from home. I implement the Augusta rule. So I split those based off of our different businesses. If you're renting out, or if you're writing off your home office and you implementing the Augusta rule is going to increase your chance of audit, let's just go find another tax code. Let's go find something else that's going to deploy your capital appropriately. If you're not going to have business meetings, or if you're not going to do what I just mentioned in your home, let's just go find another tax code. That's okay as well. Does that help give a little more context as well?
Yep.
Good. But coming back full circle from a tax standpoint, tracking your expenses is a $9,200 saving on average. I've got a big sample size. We filed 50,000 returns last year, like I said, and tracking expenses was the number one reason why you don't remember what you had for lunch last Tuesday. You're not going to remember if it was business related a month from now. So the more you can get in the habit of tracking those expenses, the better. Okay. Asset protection is obviously important. And full transparency, this is my least favorite part, but it is a lot of what I do. If I brought my attorney on here, he'd talk to you about this for 45 minutes. I'm going to try and take like 45 seconds and just, it's a sue happy world. One of my mentors helped us with a lot of mergers and acquisitions. I get the opportunity to work with him on a daily basis now. And one of the things that he said to me was, what's really cool about my business is I get to help entrepreneurs understand it's not if you get sued, but when you get sued. And when you're setting up your business, if you have that negative thought in mind of it's not if I get sued, but when I get sued, a lot of times it allows you to free yourself to focus on generating income. Another area, over the last 13 years I've been doing this, the weirdest arguments and the most aggressive arguments that I've seen and been a part of are with friends and family. A lot of people get into business relationships with, oh, it's my cousin. We've known each other our whole lives. We're never going to let a couple dollars get between us. Next thing you know, there's too much money or not enough money. There's never the perfect amount of money. That's another weird thing that I found. There's too much money or not enough money all the time, right? So when we look at number one here on breach of contract, if you are getting into business with a partner, if you are taking on investors, from a contract standpoint, this is my weird optimistic brain. I like to change the way that contracts are looked at. If I set a contract down, it's looked at so negatively often that I want to change that narrative. And the way that I like to change that narrative is in setting proper expectations. So when we set up LLCs or corporations, whenever we're structuring operating agreements for clients, a couple of the major areas with partnerships that we ask people to look at is, number one, what is the percentage of ownership? If James and I are going into business together and he's 60% and I'm 40%, great. That's one thing that we can check off the box. The next thing that I tell people to look at are, what are the roles and responsibilities? So if James is doing all the sales and I'm doing all the marketing, what are we going to do and what are we not willing to do? James can say, Tommy, I'm not doing the bookkeeping. You need to find someone to do. You're part of the operation side. You do the bookkeeping. I'm not doing it. I think just as important as what you're going to do is being very clear on what you're not willing to do, so that in the beginning you have the expectation on who's doing what and what you need to hire out for moving forward. Okay. I'm a big believer as well on hiring instead of partnering if possible. If you can hire for it instead of giving away equity, a lot of times it makes it a little bit easier on you as well from a business standpoint. So the last thing that I tell people to look at from a operating agreement and a partnership is payment distribution schedule. So once again, James and I are going into business together. We go make 20 grand, 100 grand. And I say, James, I own 40%. We just made 100 grand. I need that 40,000. James says, what do you mean? We're building a business. You can take 10,000, but we need to reinvest back into the business and go generate more revenue. Say, James, what do you mean? I got a house payment. I got a car payment. I'm in over my head. I need money now. That very first sum of money can make or break a lot of partnerships and relationships. So how much money are you going to keep in the account? When are you going to take dollars out? And how can you get really clear in the beginning stages? Because once there's money there, there's either too much or not enough. Okay, so let's change the narrative around contracts and make it more of a collaborative. If James and I know that he's doing the sales, I'm doing the marketing, we're keeping 50 grand in the account, and we're going to take distributions out after that first 50 grand. The likelihood of us having a stronger working relationship moving forward increases from what I've seen over the last 13 years. Okay. Total switch and transition on you. I'm going to move over to business credit and corporate funding. I want to show you this visual. I like this visual a lot because it just simplifies what you're already familiar with. And then I also want to show you our business credit software that we operate with and that we help clients utilize. So right now, everyone has a legal name, a social security number, and a personal FICO credit score that ranges from 300 to 850. On the flip side, all of you already have business names. You already have your EIN number, but how do we build and develop a paydex score or a separate credit profile for your business? It's called a paydex score. It ranges from 1 to 100, and 80 to 85 on that scale is like you having a 750 to an 800 credit score. So let me just show you this real quick. This is our business credit software that we own. It's called Fundability. And it's a 7-step process where step number 1 is how can you show yourself as bankable as humanly possible? Address, entity, website, email, business phone number. How can you show yourself? Once you log it in here, what I love about this software, I paid $2 million for this, by the way, so I hope you like it. You better be impressed. You hear me? What I really, really love about this is I've got direct connections in with these credit bureaus that once you log it, it shows you how likely you are to be fundable in these different areas. So step number 2 is making sure you're verified with Dun & Bradstreet, Experian Business, Equifax Business. Step number 3 is getting accounts that nobody wants. Okay. I'm very transparent with you. These are things that are not going to get you excited. Gas cards, store credit cards, different things like that. But what's important about the way that we've set this up, these accounts are going to artificially inflate your credit profile within 3 to 6 months. And the reason that is super valuable is because then you can monitor your score and you can get additional lines of credit. But here's what's amazing. I have all sorts of different relationships. James, I haven't even told you this. One of my best friends is a big SBA lender with Celtic Bank. He's one of the biggest SBA lenders in the nation. So I've got all sorts of, you don't have to just go to a bank to get money. There's so many different funding options and different banks are willing to lend to different lines of credit. So is it a line of credit that you're looking for? Do you or don't you qualify and why? Is it a purchase order? Really cool story about SBA loans. Excuse me. We have a client that was on Hulu. They had a big real estate show. They've got plenty of money, but they had an opportunity. We've been helping them build business credit for about 4 or 5 years. And at the end of last year, they had the opportunity to buy a 30,000 square foot warehouse with a fully operational trampoline park business inside of it. Instead of using their own money, they went and qualified for an SBA loan and got a very favorable rate, only had to put 10% down. And this business is generating $15,000 to $20,000 of cash flow for them a month off of leveraging a different line of credit that they wouldn't have been approved for off of a traditional loan. So I share this with you because I have never met an entrepreneur that says, I wish I had less money, right? That's yet to happen. So the more funding opportunities that you can create for yourself, the better. And if you have good personal credit, it makes a lot of personal problems easier to resolve. When you build business credit, it's a lot easier to grow, scale, help more people. And like Tom says, do well and do good, right? That's what my mom always said. You give a good person more money, they do more good. You give a bad person more money, they cause more harm. So the more funding opportunities you can create, I think naturally it puts you in a much better position long-term. Okay. Last, I've got 2 more slides that I want to share with you, and then I want to make sure to leave time for additional Q&A. I know Keith's got questions, so we got to give time for questions here. Your structure is a living, breathing organism. And what I mean by it is it's constantly going to change. Okay. I think it is a great idea every year when you file your taxes to do an overview on your asset protection and your entity formations. Up top, all of you should have an estate plan. Trust, will, living will, power of attorney. If you don't have one right now, it doesn't mean you need one tomorrow, but put it on the to-do list, put it on the vision board, put it on the why wall next to the fancy car and the nice vacation, right? All of you should have an estate plan. We do estate plans, right? $1,000 to $3,000, kind of depending on your need. We can help with the estate planning piece if it's something that you need help with. From there, remember what I talked about earlier on privacy and protection. So I'm going to use myself as the example with this one. I have a holding company that is based out of Wyoming. So not all states are created equal when it comes to corporate law. Delaware and Wyoming provide more privacy than other states. Is this something that you have to have? Absolutely not. But I do want that additional privacy aspect. So I have a holding company out of Wyoming. It doesn't do any business, but it owns my other businesses. So, sorry, I don't know how I keep doing that. If you're an agent and you're generating active income, that's where I want to look at more so having the LLC taxed as an S Corp or an S Corp to be able to avoid that self-employment tax, right? But if I have a rental portfolio, passive income isn't subject to self-employment tax. So I can we've all heard, don't put all your eggs in one basket, but no one tells you what eggs to put in what baskets. So how do you separate out your different revenue streams and your different businesses, give yourself a true profit and loss, have the privacy and the protection and the separation, and make sure you're properly insured? My point that I was making earlier, I think this is a really great thing for everyone to review on an annual basis. When you file your taxes, do you have the privacy and the protection, the tax benefits and the credibility that you're after? If not, how can you plan accordingly so that year over year, those things are constantly going to change, right? Last thing I want to share with you here, I included this slide kind of last minute. That's why it's out of order. But the one big beautiful bill has been commonly talked about over the last years and is fully into effect. It's an additional 1,000+ pages of our already 70,000+ page tax code. But these are a couple highlights that I wanted to pull out and share with you, because what I like about the big beautiful bill is there's a lot of verbiage in here like permanent, lower, long-term. I don't know if permanent is really a thing, but that's the verbiage that they're using. So just to go through these real quick, I like these first two because knowing that we're going to keep a lower tax rate for the next several years is very encouraging for me as a business owner and an entrepreneur to say, I've got a couple years where I think the taxes are probably going to go up once the tax code changes or someone else is in office. This QBI is an amazing thing for you to be able to rely on as an entrepreneur. The qualified business income deduction, it went into place back in 2020 when Tax Cuts and Job Acts was implemented. It was set to expire this year. But the big, beautiful bill is it's saying that the QBI is now going to be permanent. So what does that mean? The QBI is 20%. They tried to get 23, but that got denied. So 20% is what the QBI is going to be for the foreseeable future. So if you make $100,000, the qualified business income deduction gives you a 20% break right off the top. So instead of having that tax liability on 100,000, you get a 20% break, you're at 80,000. That's a massive benefit for all of us being self-employed. And knowing that's going to be in place for the next foreseeable future, once again, I like that. I want to really rely on that. And that's going to be part of my business strategy over the next several years. Okay. Bonus depreciation. The reason I own as much real estate as I do, I didn't buy any real estate last year. And the reason for it is knowing that bonus depreciation, or assuming that it was going to come back this year, which it did, is back to 100%. When I buy these properties, I love running cost segregation studies on them to accelerate that depreciation to 5, 7, and 15 years instead of 27 and a half years on a residential property. That way I can front load those deductions. The way I oftentimes am thinking about my personal profit and loss is this year is the most money I'm ever going to make. Because if I can lower my tax liability to keep more money in my corner, if I make more money next year, that's a great problem to have. But what can I do to lower tax liability now, create cash flow into the future where passive income is taxed between 0 and 20%, as opposed to active income being taxed between 10 and 37%. So these are all business decisions that, whether it's small or large, if you're investing into a software, coaching, education, all the way up to commercial buildings or more, how can you align it with your life to create short-term wins and long-term passive income? Okay. And all this come down to is a little proactive strategy as opposed to reactive filing. If every year you're putting your documents together in February and March, and you're crossing your fingers saying, please don't have a big tax bill, let's change it so that this year there's more proactive strategy on a quarterly basis so that you can, with confidence, deploy your capital to lower your tax liability. A little bit of strategy goes a long ways from a tax standpoint. You don't have to memorize all this stuff. You don't have to become a tax expert. I haven't, but you can hire them, and you can meet with tax attorneys and accountants that can help you understand your situation specifically and really lower that tax liability. Okay. Research and development. This is one that was broken up over 5 years for previous years, but now tax research and development is now in a 1 year. So the reason I like sharing this one with people like yourselves, how many times have you heard the two letters A and I put together over the last year, right? AI. It felt like BOI when BOI was going back and forth. I for a while there, I was like, if I have to hear BOI one more time, I might jump out of this third floor. And then I had to go speak at a real estate event in Boise, and the airport was BOI. I was like, I can't get away from it. But AI, if you're implementing AI into your marketing, into your business, how can you make these things research and development tax credits that are lowering tax liabilities? Childcare, U.S. car-made interest loans. This one isn't as cool as I first thought it was, because if you make over 250 grand, you no longer qualify. So that's another good point, though. I mean, the U.S., I say that because I didn't like it, but knowing the negatives about these tax code changes is just as important as understanding the positives. And if you go buy a new 2025 US made car and you make 500 grand and you can't write off the interest, that doesn't do you any good. So let's understand the pros and the cons as you're making these financial decisions. So I want to open it up for some questions here. I see some comments and questions in the chat already. James, first to you.
Yeah.
Any feedback, questions, anything else you want me to elaborate on
I
here?
would just say, you're so proactive and you're putting all the pieces together to make it simple. Most real estate people, I always call them entrepreneur. You're not W-2, right? So you have other ways. And what you do is make it so easy, simple. And I love that you made a software to calculate this. I mean, this is what everyone needs. I know Max has a question. I'm going to go pick on Tom Trong because he deploys a whole bunch of crazy stuff. If you could solve his problem, you could probably solve everything else and save him more money because he's usually on it. But Max, we'll send it to you first.
Yeah, Tommy, the four business tax rather deductions. If it's ordinary, necessary, helpful, and what is the fourth one?
Appropriate.
Appropriate. Thank you.
Yeah, good question. And I'm happy you bring that. I wish I knew those 4 words years before I did, because the amount of times that, is this a business related expense? How are you able to justify it in a worst case scenario of an audit, for instance? Ordinary, necessary, helpful, and appropriate. I've been through, I've been doing this a long time, and full transparency, I've really kind of pushed the envelope when it comes to tax deductions. And I've had 2 silent audits. One of them that I lost and the other one I won. The one that I lost, I was deploying capital into what was called a conservation easement, where I could donate $100,000 to land for them to preserve minerals. And I got a $500,000 write-off against my income. But they didn't get enough minerals. So I got audited and had to pay back the 100 grand. And I thought about this for a second and I was like, does that suck? Yeah. But I did it for 7 years and I ended up saving millions of dollars in taxes. Ultimately, it was millions of dollars of write-off. People are so scared of an audit, and rightfully so. It's not a fun thing. I hope no one has to go through that. But what's the worst case scenario? You got to prove it or you got to pay it back. So my thought is, as long as it's ordinary, necessary, helpful, and appropriate, once again, that's the entrepreneur in me. I'm not the one filing your taxes. I've got a team of accountants and attorneys that would kill me for just telling you what I just told you. But the reason I say it is because my risk tolerance is much higher than an accountant, naturally, as I'm an entrepreneur. So I'm going to weigh that risk accordingly. And if you can find tax codes that you are comfortable with, I feel like that's half the battle, right?
I'm going to add too, because you got to work with experts, people who know their stuff. And I'm glad that you have almost a starting base. I know one of the teasers I love, without telling pricing, LLCs that you forming to set it up. I'm glad the AI gives you evaluation. And I would always suggest, if you don't mind, Tommy, putting your information in, is to reach out for anyone that has anything, is to start setting it up, at least set up your LLC, working through the progress of what commissions you make to what you're investing in and diversifying. Because this group, Tommy, everyone's more senior. They've have portfolios, all sorts of stuff like Tom, Tron, buying into tech, this, that. Many people here run businesses. They do brokerage, they invest. I mean, you solving our problems would be great. So if you have a question, but I know Tom, because you do a ton of stuff. If you don't mind sharing yours, because I'm sure mine's is a nightmare. Yours is probably even crazier than mine.
Hey, Jim, thanks for hosting this call as always. Tommy, good stuff, man. I mean, I don't know what you want me to share. I mean, way too much to share in a quick 30-second commercial, but Tommy, your point's a point on, and I'm I'm an entrepreneur. I take risks, and having someone like you with your knowledge in our corner could really help reduce what we rightfully owe to Uncle Sam. And we only want to pay as much as we need to. The rest, we've just got to keep. And I think Jim's trying to say, yes, I invested in software and I invested some nodes to support a blockchain. And under Section 179, I was able to I am writing off 100% of my node operating software. Many people don't believe that, but it's absolutely possible, and never mind the returns on it. So thanks, Jim, for bringing Tommy on. Tommy, I did go to your website to try to register, and there is not a registration button, just so you know.
I put a link together. I was just going to get it right now.
Okay.
I put a link in the chat just barely so that I know where you're coming from and the investment strategies and who you are and where it's coming from. So if any of you want to click that link, what it'll do is it'll take you to where you can schedule a free 45-minute to hour consultation with our team, whether it's entity formation, business credit development, tax strategy, tax planning, estate planning, or just knowledge. It is a free call. Everything's discounted off of that link with the partnership and going back and forth with James like we have. So if any of you do want to schedule, I dropped that link for you directly in the chat. And Tom, congratulations on the write-off. Like, just to add to Tom's point and his comment here, investing over $500,000 in software previously, that's $100,000 write-off over 5 years. Being able to front load that in 500 grand in 1 year is absolutely game changing for your life and your business. It's how it changed. That's what I was, the big, beautiful bill. Like, I'm happy that you're saying this so that I can tie together what I was trying to say. The big, beautiful bill is like, how can you plan over the next 2, 3, 4 years? I'm going all in on research and development. I'm going all in on bonus depreciation. I'll add to my portfolio significantly because I can lower taxes now and create passive income moving forward. It is game changer stuff. And I'm happy to hear that you're taking full advantage of it. It sounds like.
Yeah, here's another example for the audience here. So at the end of the year, right, basically on 12/27, 12/28, I spoke to one of our heavy hitting icon agents at EXP. That's you're making a lot of money. And she told me she had a bang up year and how does she reduce her tax liabilities? And she said, well, I talked to my CPA and my CPA told me to go out and buy a car. And I says, I know how much you make. You don't qualify to buy a car. You're over the limit to get the car. And even her CPA didn't know the rules, right? And of course, she turned to buying the software.
So there, with Section 179, as long as the vehicle is over 6,000 pounds and for the business, there's still ways that can be deducted. My wife got a new Range Rover on December 28th because of that deductibility of being able to take it in the first year. But I kind of joke about that as well, Tom, where you're absolutely right. G-Wagon, Range Rover, Escalade, YouTube University will tell you to go do that. But then someone goes and buys something under 6,000 pounds, you don't get the same benefit. You're right back to the mileage or the itemized deduction. So if it's not the proper weight, if it's not for the business, you're 100% correct. Go find another tax code. There's a million tax codes that we can go find. We just need to find the ones that truly do align with your life, like software, like investments into areas that are actually going to move the needle. That the Range Rover is not going to move the needle. I'm just going to lose my shirt, but my wife's happy with it. So I guess that we are as well. I'd drive a 2004 Honda Civic if it wasn't for Section 179, but all my cars are over 6,000 pounds because of that depreciation. So,
and you like it too, Tommy. I think Tom Trong hired his kids too. So a lot of things, Tommy, you got to talk to Tommy also, because if he can get you some more, and I think he can, because you can see you got to be up to date and not be archaic and be proactive. And as entrepreneurs, we like to push the limit. But Keith, go ahead.
Yeah, real quick, Tommy, I did click your link and it's not pulling up your calendar to reserve a time on that link that you put in there. I'm just going to let you know that. So
let me just show you this real quick. So when you click on it, it'll take you to this page right here.
Correct.
Right.
Correct.
Click schedule a call and it'll take you.
Look what it says. On mine, it didn't pull up the calendar. It says it's not available.
Oh, really?
That's great. I'm glad it works on yours.
When I'm sharing my screen, it shows differently. I was looking up this EID loan for you as well. I'm happy you brought this up. I was looking this up before we were chatting with Tom here. One thing I do want to be very clear with you on as well, Keith, building up that Paydex profile.
Yes.
I always tell people, generally speaking, it's going to cost you about $1,000 between like fuel costs and I always joke that with Granger or Uline, whenever I get 20 air filters delivered to the house, my wife's always like, why are you building more business credit? What is wrong with you? Toilet paper, paper towels, air filters. We've got to be able to buy something and pay it back over the first 3 to 6 months so that it does elevate your Paydex profile. You're not going to go get the lines of credit. And I want to be clear on this. I want to set very proper expectations here. You're not going to go get these massive lines of credit with low interest rates until you build up that Paydex profile for a 3 to 6 month period. But in a year from now and 2 years from now, oftentimes it's very beneficial. So just to give proper expectations, it's not an overnight thing. It does take a little bit of time to build up those credit profiles. So hopefully that creates a realistic expectation is what I'm trying to do. I don't want you to, Tommy said, I want to make sure we're on the same page.
I know it's a short, I know that. That's what I needed to know is how. Time is fine. I just needed to get started correctly. That's all.
And
is that link working for anybody? Is anyone else still having an issue, or are you able to schedule on there?
And people on the call, we'll send the correct one. If there is any issues, reach out to me or Top Agent Nation. We'll figure a way. But one thing is, Tommy, why I kind of wanted to do this early too is I know a lot of people, you got to do it before, December 31st. What could you do for people now to save a little money? What can you do?
Oh man, there's really not too many options. You can contribute to retirement accounts accordingly. If you purchase property or if you made investments last year, you can still run cost seg studies and accelerate depreciation, but your options are pretty limited for 25. Retirement accounts, depreciation, taking advantage of investments that were already made in 25 are going to be the main ones. Other than that, I tell people water under the bridge. Let's focus on moving forward and put a game plan in place for 26 moving forward.
Yeah. So I suggest to everyone to reach out, find out, and this is the best for all us entrepreneurs. And I wish I would have known that. I did it the hard way, Tommy. I had to build credit from scratch with my first brokerage company, then writing it off. But I learned it from, trial and error. And a lot of experts that really took me to the cleaners, they just took a lot out of me without giving me too much help. So I do suggest, because I did talk to a lot of estate planners, and you've even gone beyond my expectations with the AI even and everything else. For us entrepreneurs who start as a sole practitioner, like Tommy, like your mom and your wife, real estate, doing transactions, to how you can build from it and save as much money to deploy. And I'm sure once you talk to Tommy and his team, you're going to have so much more. But Tommy, we're going to have you back again more, because it is so important. And I'm guilty of this. It's not what you make, it's what you keep, and structuring and saving for taxes and payroll, or creating your own W-2 to pay yourself to do the Social Security. And I'm sure you do all of those strategies. Everyone needs to think about this, of what you can get from the government, what you can donate to nonprofits. And I'm going to reach out too, Tommy, because I always love to use and start with people that give us this great advice. So again, Tommy, thank you so much for being here. If you can't get to the link, please reach out to us at Top Agent Nation or myself. And Tommy, we'll look forward to seeing you again. But have a happy 2026, and don't go give more than you have to, and talk to Tommy now. So 2027, we're not back here again telling you the same thing.
Awesome. Thank you. Thank you for having me, James. Thank you everyone for being here. This was a lot of fun.